The Presidential Commission of Inquiry has issued a directive on the Auditor General to calculate any losses that have occurred through the secondary market in relation to Treasury bonds. Newsfirst.lk reports on day 50 of the proceedings.
The Presidential Commission of Inquiry issued a directive on the Auditor General today to conduct an audit and calculate any losses caused to the government and/or other statutory bodies with regard to the method followed in relation to the secondary market transactions and the secondary market prices between the 27th of February 2015 and the 31st of March 2016. The application was made by the Attorney General's Department. However, there were objections from lawyers representing other parties. Despite the fact, Deputy Solicitor General Dapula de Oliveira also confirmed to Newsfirst that the Commission issued a directive on the Auditor General to conduct the calculations. Auditor General Gamini Vijay testified that accepting bids greater than what was offered is an unusual occurrence. In relation to the auction dated on the 29th of March 2016, the Auditor General said if the 40 billion rupees on offer was accepted, the remainder of the cash requirement could have been settled by an overdraft or by another auction, which would have given a lesser rate. Bonds to the value of 40 billion rupees was on offer at the auction on the 29th of March 2016. A total of 142.422 billion rupees were received in bids, of which 77.732 billion rupees was accepted. The Auditor General said the excess of 37.732 billion rupees comprised of 60% of bids made by Perpetual Treasuries Limited and 40% divided among the other primary dealers. The estimated loss in accepting 77.732 billion rupees in bids as opposed to the 40 billion rupees on offer has been calculated as 784.898 million rupees. 4 separate bonds were on offer on that day. The Auditor General has found no issue in relation to the first bond. However, he has calculated losses for the second, third and fourth bonds as the amount accepted was greater than the amount offered. The loss for the second bond was calculated at 258.828 million rupees, the third loss at 104.636 million rupees and the fourth at 421.434 million rupees. Gamini Vijay in his report notes the total estimated loss from both the auctions on the 27th of February 2015 and 29th of March 2016 was 1.674 billion rupees. He says the authorities concerned should be responsible for the avoidable estimated loss. The Auditor General revealed if the bid acceptance was limited to the amount on offer, the state would not have incurred any loss. He noted that the Employees Provident Fund purchases a large amount of bonds in the secondary market at a lower rate, rather than making bids at high rates in the auctions. The Auditor General revealed that the EPF has available funds in its portfolio for investment purposes. He added that the bonds purchased by Perpetual Treasuries Limited has changed hands in the secondary market and were eventually purchased by the Employees Provident Fund at a lower rate. The assets and profits of Perpetual Treasuries Limited had come under the audit of the Auditor General. In 2014, the Governor of the Central Bank was Ajit Niwad Cabral, and in 2015, the Governor was Arjuna Mahendran. Meanwhile, President's Counsel Nihal Fernando suggested to the witness that the method in which the audit was done was wrong. The Auditor General, however, denied this claim.